Thank you. Oh, I'm going to have to put my glasses on so I can see it. So Challenger, quick snapshot as I get up. Two assets, both in South America. Lead asset is our Hualilan gold project in San Juan province, Argentina. We've taken that through from 30 historical drill holes to a 2.8 million ounce resource, open in all directions. Got a high-grade core of 1.5 million ounces, and we've put out a scoping study in November. It will be Argentina's next mine. In Ecuador, 4.5 million ounces, again open in all directions. We've taken that through from exploration to a 4.5 million ounce resource. It sits next to a 20 million ounce project, and we've got a drill program underway at the moment that should significantly add to that resource. We do plan to actually divest that Ecuador asset. Low-grade porphyry doesn't fit with our high-grade. Who are we? So my background, exploration geologist, got into the market as an analyst, so I understand the market. Got out with some assets in Saudi Arabia. 6 years later, a lot of hard work, a lot of money raised. We sold that company for $1 billion. I had a small part in it which let me put the money in to seed this. Sergio Rotondo, my partner in the project, Argentinian national who was the original project owner, took shares, and Sonia Delgado, our exec director in San Juan in Argentina. Sonia has been the mining secretary in San Juan. She does all the government relations, all the permitting. She's the reason with Sergio that we've been able to go from 12 small mining licences that are 2 by 300 metres to 600 square kilometres, and why we will get permitted. Our COO, Mike Zivic, we pinched him from Barrick. He was running their 400,000 ounce a year Velaredo mine in San Juan province. He got tired of driving past Hualilan and another 5 hours up into the highlands. Largest shareholder, BlackRock, which is the largest resource fund in the world, and Queen's Road Capital, a very sort of clever mining fund out of Canada, has made a $15 million investment. Both, provide a big endorsement for the project, and also Argentina as a jurisdiction. The other difference with us, board and management, we've got 17% of the company, so we lie awake at night thinking about how we can improve the share price, not, can I increase my salary so I can get paid an extra $20,000 or $30,000. A bit about our journey since we started. IPO'd at 3 cents, rode the wave of the market. It was great fun. 1 rig turns 3 rigs to 8 rigs. We raised $42 million at 28 cents. All of that money's gone into the ground. In the 5 years since IPO, we've done 240,000 metres of drilling in Argentina, 40,000 metres in Ecuador. We've added 7 million ounces of gold from scratch, and we've shown we've got a clear pathway to get Argentina into production. Where do we sit now? We bottomed out at 3.9 cents about 3 weeks ago. I think the gold price being 2,500 has helped sentiment, but 5 years on, we're marginally above the IPO price, and we're a very different company. But from an investor sort of sitting there, there's a real opportunity there. And it's not just us, it's every company in this sector is like us, but there is deep, deep value in the smaller gold sector right now. Just a couple of before and after. So that's us in October 2019 drilling our first hole in the red circle, and the yellow is where the next shot comes from. So this is what 200,000 metres of drilling looks like. Basically, we've drilled it up on 40 by 40 metre spacing. It looks a bit like Swiss cheese. But the good thing is all of that money's gone into the ground and we have a real asset. I'll talk about our lead project for a little bit. So we sit in San Juan province, Argentina. Voted the #1 mining jurisdiction in South America. Argentina is not without its challenges. The key problem Argentina's had for the past 15 years is I sell a gold bar, I get paid US dollars. I've then got 7 days to convert 60% of those US dollars into pesos, and I've got to sit there holding pesos, which is not great when you've got 100% inflation and the value of that peso is dropping and you can't get dividends out unless you cross a sort of 40% currency spread. And that's one of the reasons Argentina's been on the nose. They have a new president, and basically overnight Argentina is now transforming into one of the better mining jurisdictions in the world, which is why BHP recently announced they're throwing $2 to $3 billion at Jose Maria and Philo. On Friday last week, a law was passed. It had gone through both houses of parliament, and effectively that's the investment incentive regime for large projects. So you've got to have a life of project spend of over $200 million to qualify. We will. What that project does is it throws out the requirement to convert your US dollar gold sales into pesos, so we can hold US dollars offshore. Drops the tax rate from 35 to 25%, so it makes it one of the better jurisdictions worldwide. Unlimited dividends can be sent back, which is important for shareholders, and it also exempts you from sort of import duties, which shaves 20% off our capital cost as well. So it's a game changer for Argentina. What have we done in Argentina? Basically, as I said, we started with some small mining leases. You look where we are now, everything in orange is us. We've got a 600 square K regional footprint. We've got the extensions of Hualilan, 4Ks north, 5K south. Basically, we've got the whole district wrapped up. And we've also purchased the 20,000 hectares of underlying land. That cost us $1 million, and a week after we bought that land and closed on the transaction, the government came out and announced that you could not get a mining licence application approved unless you were the underlying landowner. We didn't know anything, but we got lucky. That land would have cost us $20 or $30 million, not $1 million a week later. Bit about the resource. The key thing with Hualilan is optionality. We've got a 2.8 million ounce resource, 1.5 million ounce high-grade core that goes better than 5. It doesn't matter whether the gold price is $1,200. It's a high-grade underground mine with a small open pit starter, spitting off gold at $600 or $700 an ounce. At $2,000 an ounce, it's a much larger open pit with a big lower grade component. And you can see from the heat map there of that resource, red and pink are the high grade. We do have high grade sitting at surface, which lets us effectively scale up. And the other key here is that 240,000 metres of drilling, low geological risk. We've got a really good understanding of the ore body. 80% of it is indicated, so we don't need to do any more drilling. We put out a scoping study, which is our base case, in November. The market was terrible. I'm sure that's a common theme you're hearing. We took the view that in order to have a viable path to production, the scoping study needed to tick some boxes. Firstly, it needed to be more than 100,000 ounces a year, or you don't have critical mass. It needed to be quick payback, low upfront capex, just over a year payback, 134 million capex, low cost, in the lowest cost quartile of all projects anywhere, and high IRR. So tick those boxes. Great project. Some of the metrics you can see there. 116,000 ounces a year over 7 years. Life of project EBITDA of 1.1 billion Aussie. Pre-tax NPV of 629 million. Now that equates to 42 cents a share for our current 4.7 cent share price. And if we look at that NPV at $2,300 gold, it's 1.1 billion. This sort of puts us in context. It gets us just inside the top 20 producers of the ASX. And if you look at GOR and GMD either side of us, they've got a market cap of $1 billion each, which means there's a lot of room to move given our $70 million market cap. And again, that's just the common theme of companies like us in the market. There is deep, deep value. Now that scoping study is really a base case. We've identified a number of ways we can improve that. Firstly, we didn't look at the low-grade gold. We've now done the heap leach test work. It unlocks that 1.5 million ounces of low-grade, gives the project critical mass and scale. The project runs around about 0.5% zinc. We couldn't get most of that zinc out. We've now done the metallurgical test work and we can recover that zinc. That adds 100,000 tonnes of zinc to the mix, which is worth about 250 million at current zinc prices. We were selling a gold and silver concentrate. You have to pay to actually transport that to Europe or Asia. We can now produce gold bars on site. That pulls another $150 million out of costs. So there's a lot of upside, not to mention that that study was all optimised at $1,700 an ounce gold price, which is obviously wrong now. And this is sort of where we're at. The scoping study, the base case, which is worth 40 cents a share, is the brown, small pits with mainly underground. And this is what it will look like going forward, a much larger open pit with still enough underground that it's flexible. But it will be a 150,000 ounces a year plus project, which opens it up to wanting to be owned by quite a few North American mid-tiers as well. More upside again, exploration. What you're looking at here is the sort of pink units are the intrusives. So they've come up at depth. They provide the fluids that carry the gold. So the model is everywhere around the edges of those sort of pink rocks, the intrusives, a bit like De Grey, you potentially get gold mineralisation. We've got 2.8 million ounces in about 3 kilometres of strike. We've only just started stepping out. We've got another 30 kilometres of that prospective stratigraphy sitting there to explore. Now, it won't be everywhere, but there'll be another 1 or 2 Wallilans somewhere in there. We've got high-grade gold, 50 grams plus sitting at surface, 10 k's north. We've just finished the mag and there is underlying intrusives there. We've got a series of old workings in the hills from the northern boundary of the resource extending another 2 kilometres where we've got 25 gram material there, and then we've got 16 metres at 16 grams, 600 metres south. So it's a big system, it's open everywhere, it will get bigger. Unfortunately, in this market, you're not going to get any value from taking it 2.8 million ounces to 4 million ounces, so we haven't done the drilling. We've also got some regional targets. A big copper target there that we're still defining that sits about 5 or 6 k's to the south. That copper target looks like it's about 5 kilometres by 4 kilometres now. So, there's an exciting copper target there as well. I'll quickly touch base on our project in Ecuador. We have announced that at the end of this current drill program, we'll divest this project to focus on Argentina. That's what BlackRock would like us to do and our other shareholders. And the reality is, in this climate, we can't fund both. So we've spoken to a bunch of Canadian brokers. What that will look like is we'll end up IPOing that project in Canada. Sitting just to the north of that is that 20 million ounce resource in a TSX listed vehicle that's got a market cap of 250 million, and the market's not giving us any value for Ecuador. We've got a 4.5 million ounce. That resource is in that black box there. It's 3 of 15 gold in soil anomalies we've drilled out. You can see some of the intercepts from the other anomalies. They're all 500 metres plus at better than a half a gram. We're drilling the 2 anomalies in the north now. We put out the first couple of holes, which were... Oh, sorry, I'm on the wrong slide. So we've put out the first couple of holes there, which have all got 500 metre intercepts. Some of the following holes are better looking. We've got about 16 holes pending. But in November, you will see a fairly big lift in the resource there to get it well north of 5 million ounces and give us that critical mass that we need. Just sort of closing thoughts on the market, why invest in Challenger. So from April, we've put out a series of sort of significant milestones, big copper target, made the decision to monetise Ecuador, demonstrated how we get some value for that. Challenger shareholders will end up with $15 to $20 million worth of shares in a Canadian entity. We've unlocked the low-grade zinc, unlocked the low-grade gold, and first holes have shown we get a big resource in Ecuador, and the share price has continued to sort of fall south. Why is that? Where we are now is we've got a $70 million market cap, $600 million value on the project, 1.5 million ounces that's not included, 4.5 million ounces in Ecuador. And why, not just us, but everyone else is sitting here, is the current model is not working, where you define a resource, you get an upgrade, you raise money, you do a study, show it works, you get another uplift, you raise some more money, you finish. The money's not out there for development. So us and other companies like us are trading as if there's no hope that you can get into production, which is why you're trading at 10%. What do we do now? We could put out a really nice looking pre-feas study in a couple of months, and I think watch our share price get hit another 25%, which is what's happened to everyone else. We had an approach about a month ago. Would we look at toll treating some of our ore? There's a plant down the road that's trying to get restarted. That sort of got us thinking. I wish this conference was another 3 or 4 weeks away and I'd be able to say a bit more, but look, strategy internally has changed. We've got a toll treatment option. We've scoped out a small-scale plant. The target is we can do everything for under 10 million US, and we'll do that for probably half that. And the cash flow out of that will fund Walilan as a whole. We've identified 3 small starter pits that have got 100,000 ounces, better than 5 sitting at surface. The sort of top 350,000 tonnes of that goes 7. So if we're trucking ore 150 k's down the road, it still works. So watch this space closely, because the market is rewarding cash flow. And in another couple of weeks, we'll be able to unveil the new Challenger and the story, and I think the market will reward us. So thank you, and come and see me at the booth. I'm next door and more than happy to talk to everyone.
Thank you. Put your hands together again.